we're an investment firm that hasn't talked about investment, so I've got to give you something to just to consider before we go. It is possible, we've had 10 years of very strong returns, so on the share market, and a lot of people would argue that markets globally are sort of late cycle, which is really code for valuations are continuing to go up relative to more so than the underlying profits of companies, and that's probably interest rate driven, and we've seen that recently. In fact, the last 6 months, as soon as the Fed Reserve stopped talking about rising interest rates, that sent the US market up, and our markets had a very strong few weeks, in part from the federal election, but also because the RBA cut rates as well. So we're always mindful of what else is out there just to try and minimise the risk and have a diversified portfolio. This L1 Capital UK Residential Property Fund is something that I'm going to include in the next monthly letter, and it's an interesting one, and I think it's possibly the whole shenanigans with the Australian Royal Commission. The UK has already been there. They're about 3 or 4 years down the path that we're probably going down. And one of the things that came out of it was that the willingness for banks in the UK to lend has diminished substantially, and people in the UK really need a genuine 40% deposit to buy a house. And quite frankly, a large part of the population is unable to buy a house. So what's happened in the UK is there's a shortage of housing, and the UK government has been stepping in and building houses for people to live in. But they're not in the property development game. So what is happening is that they're recycling their capital. So they build an apartment block, then they need to sell it. And then there is a place for firms to then step in and buy these apartments from the government. And it's generally at a fairly substantial discount. When you compare selling the apartments individually, as opposed to a block, it tends to be somewhere between 25 and 30% discount, and often the rent is at a 25 to 30% discount as well. So firms are coming in, buying these properties, starting to sell off the units individually and making a profit for doing so, as well as increasing the income by moving the rent up to market rates. So it's an interesting situation. It's a play on, I think, excessive regulation that I think in time might abate. And it's also a little bit of a play on Brexit, because there's a lot of uncertainty in the UK. One would hope sooner or later they get that sorted, and that's a catalyst for them to start to move forward as well. So that one is something that people can consider over the next month. And the second one that I think is quite interesting, and I'm sort of earmarking this potentially for those that have, say, the Newmark Hardware Trust that owns the Bunnings buildings, and that money will be redeemed towards the end of the year. I think this is an interesting one. JP Morgan have a global transportation fund. Normally it's only available for institutions, but they are opening this fund up in the second half of the year to smaller investors, retail investors. And out in the marketplace, because people are seeking yield, if you own an airport, you will sell that for a very high price. There's a real demand for infrastructure assets, whether they're ports, roads, airports. Have a look at the Transurban share price of late. That's a good case in point. But infrastructure, sure, infrastructure involves the physical asset, but the other part of infrastructure is the things that connects the dots. And that's, the trains, the planes, and the ships, and that's pretty essential infrastructure as well. And corporates don't want to tie up their money, owning a ship or an aeroplane or trains. They'd rather just borrow the money, for want of a better word, and recycle their capital in other parts of their business. And what's happening is banks are moving out of this area, and banking globally is becoming much, much simpler, and that's creating opportunities for more entrepreneurial players into the market. So if you're looking at say an iron ore carrier that is operating between Australia and China, you're getting the security of the ship, and you're also getting the corporate security as well. So you could lend money to Rio and get 3%, or you can lend money to a ship at 12%. When you take into account the depreciation of roughly 4% per annum, you're still getting an 8% return. So I think it's actually very low risk assets that will provide a very good risk adjusted rate of return that isn't going to be correlated to shares or other more liquid markets going forward. So there are two items on the horizon, and we can act on one now, and I'm hoping we can act on this one later in the year. But I just thought I'd let you know.